Hello and welcome to your Daily 5 with StockCharts.com. My name is Larry Tentarelli. I'm the editor and publisher of the Blue Chip Daily Trend Report. You can find me online at bluechipdaily.com. Also, my Twitter handle is at LMT978. And I've brought with me today 5 charts that I think are especially relevant for where we are in the markets with the markets currently pulling back. So we'll get started, and we're going to take a look at my first chart for the day, which is going to be the S&P 500. So I put these together this morning before the open, but I wanted to go over a couple of things. So where the S&P is right now. So it's trading as I speak at 42.71. So coming into the morning, there's a couple things that are relevant. So the S&P on Friday had its first close below the 200-day moving average since June of 2020. So this is relevant. This, to me, is a much more cautionary trend signal. So what I do is I follow trends and moving averages, and I use the 50-day moving average extensively. I use the 200-day, and what the 200-day tells me is I want to be especially more defensive and more cautious when the index is trading below the 200-day moving average. So I've got a much higher level of cash here. I took some positions off the table last week. I took some positions off the table this morning, but there's 2 things on this chart of interest. So the first thing, obviously, is that the market is below the 200-day. But the second thing that we want to take a look at, and we're going to take a look at a couple momentum oscillators soon, but the S&P 500, the daily RSI on this chart is at 26 and change. As we speak, it's at 22. So the daily RSI is the lowest that it's been for the S&P going back to the lows in March of 2020. So what this tells me is we've got conflicting signals. We've got a weak index below the 200-day moving average, but we also have the most oversold daily RSI going back to the March lows. And once the S&P, you can take a look at the chart, and once the S&P starts to get down to 30 or lower, that normally signals some type of near-term selling exhaustion and some type of a near-term reversal. But what the markets are going to need is some type of a positive catalyst, and what it could be, and I don't make any predictions, but what I'm looking for, obviously the FOMC meeting is on Wednesday. They're going to release their statement, and if the markets see anything positive or react positively to the FOMC statement, then the markets could be positioned for a pretty strong reversal to the upside. But I don't want to try to get in front of that. I just want to wait for now, but I want to know where we are on the chart. So we're going to move down to chart number 2. And chart number 2 is a follow-up from chart number 1. So this is the New York Stock Exchange McClellan Oscillator. And basically what this is a internal market momentum reading, and it measures advancing issues versus declining issues. And if we take a look at where we were to start the morning, negative 86.06. So this is the 3rd lowest reading. In December, it was a little bit lower. In July, it was a little bit lower. But this is going to be the 3rd lowest reading, also going back to March 2020. So also what this tells us is the market is at oversold extremes as far as momentum goes. But 2 things. Indicators don't lead the market. So I don't want to look at this chart and say, well, the market is oversold, so it automatically has to reverse higher, because that's not the case. Price always leads, and we can see the NYMO went much lower, down to negative 138. So what I do know, it's historically near the very, very low end of the range. The market normally reverses higher from this level, but once again, just like the S&P 500, we're going to need some type of a positive catalyst first. And that positive catalyst could be the FOMC. It also could be a technical catalyst. So at some point, if the market gets technically sold out and the buy programs come in, then that could start to move to lead to a sharp move higher. What I'd want to look for there, as I speak, the S&P is down 3% right now, 42.65. What I would want to see is a very sharp reversal higher and a positive close on the day. So we don't have that yet. What we do know, this is number 2 that shows that the market is very, very oversold, but we need that upside catalyst. So we're going to take a look at chart number 3 as we move down. And chart number 3 is very important to what I see underneath the surface. So my view, and if you take a look on your charts, my view is that the market started to pivot from growth to value November 30th. So if we take a look all the way down at the lower right-hand side of the chart, on November 30th, Powell came out, the FOMC, and they said that they were going to take a more hawkish stance going forward on tightening. And we can see, if you look in the bottom right-hand corner, this chart is the Russell 1000 Value ETF versus Russell 1000 Growth. And this is the ratio. And you can see if you go back to 09, this has been pretty much in a downtrend. So what this chart shows from 2009 to 2022 is, for the most part, that value has underperformed growth. Growth has outperformed value. But what we'll see at the end of 2022, sharp move higher from 0.51 to 0.60, which is where we are right now. And what this signals to me is that there is a longer-term rotation in the market underway from higher growth, higher valuation, higher volatility stocks into value stocks, which are traditionally going to be lower valuations, lower volatility. So this value to growth rotation is something that I think that we should pay close attention to. So with that being said, we'll go to my next slide, and that's going to be a key factor in the growth versus value debate. So what I do think is, at some point, if the markets show some type of a reversal coming into the upside, what I would look to do, and what I'm going to look to do, is I'm going to look more at a few index ETFs or sector ETFs. So if I see a signal in the market that says to me the market's maybe sold out, we may be moving higher for a reversal, instead of me just buying one or two stocks and trying to get that right, what I would rather do is focus either on an entire index or an entire sector. This way we don't have to figure out, is Microsoft going to be the right stock to buy? Is Google going to be the right stock to buy? Instead, what I want to do in a broad market reversal, if and when that shows up, is I want to pay attention to the sector ETFs and the index. So XLK, for those that are looking for technology exposure, and for where I'm looking, I'd want to see it reverse and hold over the 200-day moving average. But I think if that happens, and I'm looking to get positioned for a recovery to the upside, I think XLK in the tech sector, this is going to have a big weighting in Microsoft, a big weighting in Apple, and a lot of the mega cap tech stocks. So this is watch list only for me. I'm not putting any money to work right now, but if I see signs of a reversal, I want to know exactly where to go. And this ETF is high on my watch list. And then we'll go down to my final slide for the day. And this is, I think, the best upside idea, not only for a reversal, but also for this rotation from value into growth. So this is XLE, which is the energy sector ETF. And this is going to have the large cap energy leaders, Chevron, ExxonMobil, some of the much bigger market caps. And we can see that XLE recently tested a new high. If we take a look at as closely as last week, it broke out to a new high of 65.53. Now, keep in mind, coming into today, the S&P 500 is down, NASDAQ 100 is down. Most S&P sectors are down on the year. XLE is the #1 sector year to date. Coming into today, it was positive for the year, and it also has the strongest relative strength. So once again, if we see signs of a recovery, instead of me trying to figure out, is Chevron the right buy, is Exxon the right buy, and I've got quite a few stock positions, but in a rebound, and a sector ETF can often give us exposure to the entire sector, give us exposure to the full recovery move without having to select which stock is going to be the outperformer versus the underperformer. So this coincides with the value to growth rotation. If you look in the upper left-hand corner, we can see this ETF has a dividend yield of about 3.46%. And the energy sector, according to my stats, is the lowest valuation of all 11 S&P sectors. It's currently trading for right around 10 times forward earnings. So this is a good combination of a very strong chart, strong sector, strong rotation, good valuations. But once again, I want to wait until I see some stability in the markets before I put some money to work. So those were my 5 charts for today. 5 ideas that I wanted to share what I'm looking for, hopefully for some type of a potential reversal soon, and then 2 ideas that are very high on my watch list if we get that reversal. So I appreciate everyone's time. Glad that you could join us, and I hope that everyone has a great day. Thank you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.